Tesla stock is down 3.2% at the time of recording this video, mainly following a hotter than expected inflation number. Now, that's a big problem for Tesla and for other interest rate sensitive names, and you're seeing those getting absolutely punished today. In fact, you have some pretty good news for Tesla, and I will share all of this, everything you need to know, in this video. But first, hit the like button, subscribe to the channel, and let me know what you think about this information down below in the comment section. First up, I would like to acknowledge I was dead wrong. I expected inflation was going to come in lower than the markets were expecting because of this plummeting you have seen in ISM service prices, meaning service inflation is plummeting, okay? That's not what happened. As Nick Timmerhouse writes on X, core CPI came in for the third month in a row, higher than expected, at 0.36% in March. Ouch. The 12-month core inflation rate rose from 3.75 to 3.8% in March. Also ouch. And the 6-month annualized CPI was 3.9%, the highest since July 2023. And if you take a look here at this chart, 3-month annualized, 6-month annualized, and now your 12-month annualized CPI numbers are all going higher, especially your 3-month annualized. That thing is really starting to take off again. Now, I did say in the last video, this basically confirms that inflation is probably not just seeing a bump. January and February, a lot of people like to write that off as seasonal adjustments, and that's why stocks have been able to do well in 2024, despite the 2, now 3 CPI readings that have come in hotter than expected. And 3 months typically starts a trend or confirms a trend. So this data really is not great. Now, I want to point this out. You actually came in at 0.36% in March. So you read the number like a even number, right? 0.2, 0.3, but it actually comes in as the full decimal. So 0.36, you were pretty close to coming in rounded down to 0.3. If you were to come in at 0.34, you would have gotten round down to 0.3, and you probably would have seen a little bit different of a reaction in the markets today. Instead, you came in at 0.36% and you got rounded up to 0.4%. But take a look at the CPI forecast, especially this column here. Core CPI, these are from all of your big banks: Bank of America, Citi, Deutsche, Goldman Sachs, Barclays, JP Morgan, Morgan Stanley, Nomura, TD Securities, and UBS. None of them expected CPI this high. In fact, only 2 of these banks, which were Citi as well as Barclays, expected a number over 0.3. Citigroup was at 0.33, so they were the closest, and Barclays was 0.31. All of your other banks were like 0.25, 0.28. That was kind of where the trend was. So 0.36 was hotter than everyone's estimate. And if you actually take a look at the breakdown of CPI, Supercore is what a lot of people pay attention to. And while Supercore has fallen a lot from where it was in late 2022, you've really started to ramp up again. Basically every reading that we've gotten, every single month, it's went up a little bit, up a little bit, up a little bit. But what's actually starting to come back is goods inflation. Yeah, goods inflation in this last month really started to rise. Some of that could have to do with wages. We don't exactly know right now, but that's not great. Now, shelter is still by far the biggest influence right now on inflation. And if you were to strip out shelter, you would be at 2% inflation. And let's just be prepared to face the fact, with all of the immigration we have seen into the US in the last year or so, really a lot of that coming to a head in the shelter market because everyone needs a place to live, that is very inflationary to shelter, and it could be a long time before we start to see more progress on inflation. Then again, the way that it's calculated, shelter and inflation, is not the greatest. Owner equivalent rent is just a nightmare. Now, we will talk about this more in depth in the next video, what it means for the markets going ahead. Are the markets going to continue to fall, or could we stabilize? Is this not as bad as some people are fearing? We'll break it down at 8 p.m. tonight. Stay tuned to the channel for that video. In the meantime, we do have a lot of Tesla specific news to get into, some of which that sounds really good. Elon Musk writes on X about 20 minutes ago, looking forward to meeting with Prime Minister Modi in India. There's a lot of speculation that this is what could be the final step towards an actual announcement of the Indian manufacturing plant. We're also expecting an Indian battery plant, according to reports out of Indian media. As I have said before, India is at some point down the line going to be a country in which that has the most developed populace, meaning they have by far the most amount of people of any country, and that trend doesn't look like it's stopping anytime soon. And eventually, whether it's 10, 20, 30, 40, 50 years down the line, they will have the most developed people in one single country. It's going to take some time. It's going to take a long time. But every single year, you get more areas of the country that continue to get developed that could be buyers of Teslas. So the quicker Tesla gets in that market, the more sense it makes. Which, if you're going full tilt into EVs like Tesla continues to do, and there's no sign of slowing down innovation or investment dollars, you might as well build a factory in India also. Unplugged Tesla has launched a website dedicated for police and government fleet EV sales. You can order complete upfitted Tesla patrol vehicles and tactical Cybertrucks, compare versus ICE patrol cars, etc. I've always wondered why cops used red lights in the interior. Apparently, it's because they want to preserve their night vision. I always thought it was strange because I hate red light. But there's your little weird fun fact for the day. Sales of Volkswagen's electric cars fell by 24% in Europe in Q1 and fell 3% worldwide. Tesla has expanded its humanoid robot program to Canada with a new job posting seeking an engineer in Vancouver, British Columbia. And yes, the latest update for FSD 12.4 is starting to roll out to some Tesla employees. We've heard this thing is really kick-ass. So we will see if it is another big step up improvement or not. BMW sold 82,700 EVs during the first 3 months of the year, representing a 27.9% year-on-year increase. They also delivered their 1 millionth electric car. Mercedes sold 47,500 BEVs in the first quarter of 2024, down 8% year over year. Overall, Mercedes sold 568,400 vehicles in Q1, down 6% year over year. This news came out earlier in the day today. Elon Musk is rumored to visit India this month to meet Prime Minister Modi and is expected to make an announcement on plans to invest and open a new factory in the country. Rich Cunningham asks on X, or really says, I guess it's a statement and a question. He says, depends on how good the technology is. In regards to adoption and FSD, Ross Gerber says the biggest risk to FSD adoption is humans and governments, not the technology. But Rich Cunningham goes on to say, do you think Tesla will have the data to prove that FSD is overwhelmingly safer than human drivers? I think they will get there. Rowan Patel, he is the head of Tesla policy, which would be really the guy that would start these initiatives with countries to get FSD approved. He says yes, and we won't be shy. And really, I think if you think about it like that, FSD has over 1 billion miles now driven using FSD and not one recorded death in those billion miles. And a lot of those miles have just recently started to ramp up. You were only at about 170 million miles driven back in September of 2023, not so long ago. So, are we confident to say we already have that data that shows it's safer than, human drivers? And I think so. If there's on average 1 death per 133 million miles driven, you're already multitudes safer than the average human driver. I think that the biggest problem right now to actually start the robotaxi network is if you don't have anyone there to take control of the vehicle. If it gets stopped in a tricky situation, the car may not know what to do and may just get stuck, and that would be a problem. But that's why there's time for Tesla to fix this and get FSD to a more perfect state. New data suggests that the number of battery EVs on Norway's roads are set to overtake petrol cars. And the latest Cybertruck that went up for auction just sold for $262,500. A lot of the time, these are other auto companies. Like Ford, they bought a Cybertruck at one of these auctions for $200-some thousand as well, because they want to get their hands on the technology, the product, so they can figure out what's going on and see what they can do differently to improve. Or maybe just outright copy Tesla's technology. That's always a possibility as well. But more than likely, there's like a 90% chance whoever bought this for $262,500 is not just a regular person. They are probably another auto company. Martin Visha shared Sawyer Merritt's post that he posted yesterday on April 9th. Sawyer Merritt writes, EVs continue to pick up major traction in the US, with adoption continuing to accelerate even amidst growth challenges. According to a new Bloomberg study, Tesla maintains an 87% brand retention rate, outperforming two non-electric automakers at 67% with Lexus and 54% at Toyota. 81% of prospective Tesla buyers are new customers switching from competing EV brands, compared to 42% of Nissan's prospective buyers. Martin Visha says super high retention rate of Tesla buyers is an underappreciated point, especially given 90% of Teslas sold in 2023 were sold to people who never owned a Tesla before. Replacement cycle hasn't even fully kicked in yet. Which Sawyer Merritt provides a little bit of clarity. That would be roughly 1,627,722 people that bought a Tesla in 2023 and never owned one before. Now, I probably should have shared this in the beginning of the video, but we'll share it here as well. This is the inflation breakdown for March of 2024. Juices and drinks up 27.5%. Beef roast up 11.2%. Baby food plus formula, I feel that, as you could probably hear in the background, up almost 10%. Basically everything. Food away from home up 4.2%. Food at home is only up 1.2%, though, explains the slowdown you are seeing in restaurants. Electricity up 5%. Video discs and other media is up 30.1%. I didn't even know people bought video discs anymore. Well, I did, but is it even that, popular? Not really. Motor vehicle insurance, my mom complains about this all the time, 22.2%. Yeah. Care of invalids plus elderly at home, up 14.2%. I don't know what invalids means, but okay. Everything is rising at very aggressive paces. A lot of this is service related, though, which again really doesn't make a whole lot of sense, because it seems like service prices, according to ISM, just fell to the lowest points you have seen since well before the pandemic. You have to go back to the crash of the pandemic to get service prices falling this much. But yet it just didn't get reflected in the data. Maybe that's something that gets reflected in the data for April, but I think it's far too soon to know that. So you can see the broader indexes getting crushed. The Dow is down 1.4%, S&P 500 down 1.2%, the Nasdaq down 1.15%, and the Russell 2000, really the big loser here, down almost 3%. The VIX is up almost 9%, but take a look at bonds. I think the big story is in the bond market. 10-year treasuries are up 19 basis points today. That is almost the equivalent of a rate hike. You're now above 4.5%. 4.5% is seen by a lot of people as that big level that can be a breaking point for stocks. You're actually at 4.56%. So you're actually like 6 basis points higher than 4.5%. This could lead to more downside, more volatility in our markets. I'll discuss that more in depth in the next video and give you the breakdown of everything you need to know. We also do have big data coming out tomorrow morning, in which I'll give you the breakdown for that in the next video as well. Nonetheless, back to your Tesla specific news, and Tesla continues to run about 4,000 different ads with Google. Global inventory numbers continue to show, to some degree, a downturn a little bit. I guess a slight uptick for the Model Y and the Model X. But overall, you've been falling the last couple of days. You want to see that trend continue, and I don't know if that's going to right now, but you really want to run down inventory considering last quarter, Q1, you just produced like 70,000 more Teslas than you sold. So inventory is going to be higher. You want to see that get run down. Google Trends data for full self-driving is still sitting at about 100. Again, I want to see where this thing levels out. If it levels out higher than where you were before this free trial, that's a good sign that adoption rates are likely continuing to go higher. Now, this is actually pretty surprising. Just weird. Retail investors sometimes just, I don't know, are strange with their sentiment. Over on StockTwits, in regards to Tesla, yesterday you were neutral at 51. And yesterday, Tesla's stock was actually up 2.3%. And you were neutral at 51. Today, Tesla's down 3.5%. And you're bullish at 70. Which, you know, you should be more bullish if the stock is down, because presumably you can buy at better prices and make more money in the longer term. But that's usually not how retail investors operate. Usually if the stock's up, people are more bullish. If the stock's down, people are bearish. That's not the case today. Message volume is a little bit on the lighter side today compared to yesterday. Yesterday you were high at 55. Today you're normal at 53. The participation ratio is at 54 today, which is considered normal. Google Trends data shows a little drop here in the Cybertruck, recently at 42, dropping to 40, but a rise in the Model Y going from 35 to 37, the Model 3 going from 34 and still at 34, the Model S going from 14, still at 14, and the Model X going from 11 down to 10. What's actually interesting now is over the last 12 months, the Model 3 is now the most searched Tesla product, overtaking the Model Y for the first time in quite a long time. The Model 3 on average is around 33, and the Model Y is around 32. Which a lot of that likely has to do with the Highland that was just introduced in the US late in 2023 and in China as well in 2023. Tesla short sellers continue to double down on their short positions, really doubling down now. You're at 3.88% short interest of free float, $19.02 billion currently sold short, and you do have almost 108 million shares that are currently sold short. That means every $10 Tesla stock goes up, shorts are going to lose about 1.08 billion. Every $10 that Tesla stock falls, shorts are going to make about $1.08 billion. So judging off of today's $6 decline, short sellers making somewhere around $600 million today. Tesla stock showed, I should say, a lot of respect around this yellow line here, this 20-day moving average yesterday, and now you fell under that. It was trying to hold support before you got this news that came out. The news was that Israel threatens a powerful response in Iran's territory if it attacks from its own soil. And then Iran says, or reiterates, a promise to retaliate against Israel over the killings of that embassy in Syria, the Iran embassy in Syria. And this kind of hit the markets hard, especially this article from Bloomberg. It says the U.S. sees missile strike on Israel by Iran and proxies as imminent. It says Iran proxies may strike Israel military and government sites. Attack would mark major widening of conflict in the Middle East. This article came out at 1:31 p.m. today, Eastern Standard Time, so about 1 hour ago, and that's what really started to shake up the NASDAQ at this time and cause a lot more volatility right here. Now, what does imminent mean? it means it could come tonight, could come tomorrow, could come the day after that. But in the not so distant future, this is particularly a problem when you see commodities like oil. Well, let's just pull it up. USO. Oil breaking out. Oil is up over 1% today, breaking out to a new high you have not seen since late 2023. 2022, oil hit about $92 a barrel, and you're now at $82. So if you get more tensions in that region, well, yeah, oil could go up further and cause potentially even more inflationary pressures. And you may be able to argue that oil is the biggest reason why inflation missed today. I don't care what it is, whether it's this children's Tylenol or this Zyrtec allergy relief, or it's this Twisted Tea or these Smarties or this Elon, I know you guys are gonna like this, Elon Musk book. Doesn't matter what it is. I didn't manufacture it. It got to my home some way. Someone bought it. Someone brought it. I didn't make it. So everything is touched by oil, whether people want to believe that or not. Everything you can touch in your home, unless you manufactured it, has been affected by energy, specifically oil. And I've pointed this out many times, but Iran is right here. This is the Strait of Hormuz. If there's a conflict in this region, you're likely to see the oil supply to some degree slow down. This is a interactive chart of oil tankers. And yeah, you could see most of the world's oil flows through the Strait of Hormuz every single day. But nonetheless, back to what I was originally saying, Tesla did not hold support, at least so far, above this 20-day moving average. That's not fantastic. And if the markets do go through a larger correction here, yeah, you could fall quite a bit more, likely down to the 160 level again. I'm sure you'll find a lot of support there. For Tesla to fall back to 160, that would only be downside of 6%. That's like a mild week for Tesla. Still under the belief that Tesla is going to focus more on profitability, and the markets are going to love that, as well as provide some clarity on the Model 2. The fact that it's not delayed, as Franz has recently suggested, and Elon Musk himself, and that's going to be positive for Tesla stock. So I do think on earnings, considering how short people are in Tesla, you're in for an upside surprise in Tesla stock. Nonetheless, let me know what you think about all of this information down below in the comment section. And last but not least, the Fed minutes came out at 2 p.m. today. As I've said before, they tend to be really just a nothing burger. After the Fed meeting, it's a transcript that comes out like 2 or 3 weeks after the Fed meeting. It doesn't tend to give you any new information, but here's the headliner. It says the Fed wants more confidence that inflation is moving towards the 2% target. The meeting minutes indicate, and they did not get that confidence today from the inflation report. That we know for sure. If you made it to the end of this video, subscribe to the channel, hit the like button, as well as come join the trading community if you would like. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.